Yeah,
Okay. Should I start?
yeah.
Okay. So again, good evening, everyone. My name is Jephthah Stewart. I am one of the business development officers at TruFund Financial Services, and I've been here for approximately 4 years. In my role, I am tasked with identifying small business owners who have traditionally or historically had challenges gaining access to capital from um, from the banks, in particular. Um, TruFund is not a bank. We are what's known as a community development finance institution. Um, and I've been working with small businesses over the last 20 years um, to assist them with gaining access to capital. Um, in the past, I've also worked with small business Department of Small Business Services in New York City. Um, that was more geared towards workforce development, but it also encompassed identifying the needs of small businesses and drawing their attention to the slew of services at NYC Business Solutions. Some of you may be familiar with the Department of Small Business Services in New York and what they do. Um, so I started out actually in residential mortgages. Um, and then when we had the debacle of 2008, I began pivoting more towards small business lending. So that's just a little bit about my background. And I will share this presentation with you and uh, your constituents at the end of the session. Okay. So as I mentioned, you know, TruFund Financial Services was started back in 2005. It is a U.S. Treasury certified nonprofit community development finance institution. And our headquarters are in New York City, but we also serve New Jersey, Alabama, Louisiana, Georgia, and Texas. In New York State, we also serve not just the five boroughs, but South Suffolk, Nassau, and Westchester counties, and several regions upstate, Mid Hudson, Western New York, and the Finger Lakes. So we want to talk about the objectives of this session, and please let me know if this may be, some of it may come across as very fundamental or preliminary, but I want to go through it so that everyone is fully apprised of what it takes to gain access to capital for their businesses. So we're going to be talking about how to prepare for a loan approval, um, give you an overview of the lending process, and certainly talk about the kinds of loans that TruFund offers. And one thing I think that's really important is that some business owners I think miss is really building and maintaining a relationship for not just today's capital needs, but the future. So why do you need a banking relationship or a relationship with a lender like TruFund? Well, um, many of you are familiar with checking accounts. That's pretty obvious from a bank. Unfortunately, TruFund um, does not provide checking account or savings account services. But then there are other things like borrowing. Um, there may be escrow services, lines of credit, payroll management, and just overall general cash management, cash flow management. So it's important to establish that early on in your business journey. So in going about looking for a loan, I think it's important for a small business to not just be focused on their own goals in securing funding, but also the bank's goals in providing the funding, and then of course securing those funds along the way. So as a business, you have your goal, you've identified needs for the business that require financing. It could be, inventory requirements, meeting payroll, marketing. You might need marketing dollars. These are all the kinds of needs you might be looking for. Um, you want to be in a position, ideally, to leverage the equity you've placed in the business, and that could have come from family and friends. Um, I don't advise the use of too many credit cards to start a business, but we do know that's one avenue to helping to start a business. Um, but you want to be able to leverage that, and that's one of the one of the reasons why you banks will have their goals. They're in the business of one of the reasons why you banks will have their goals. They're in the business of okay. Um, and then they're looking for to have those funds secured. They may ask for collateral, such as a home or a piece of real estate. They may be equipment that you have that you can leverage as collateral. And then, of course, the banks are also looking to earn a satisfactory return on the funds that they lend out while minimizing risk. Ultimately, you want to get to a point where there's a meeting of the minds. And this is what we're talking about when we mean bridging the gap between your return and the bank's safety, where there's mutual benefit and a satisfactory loan proposal can be established where you're demonstrating your ability to repay the loan. Okay. So let's talk about the lending need. Excuse me. Oftentimes you may have long-term sales growth. So in these instances, it may take quite some time before you realize payment or compensation for your services, right? And therefore you need that funding to cover that period of time. There may be short-term sales growths, seasonal, like maybe the bulk of your business is around the holidays or perhaps in the summer months. And in order to take advantage of that time, you require funding to manifest that. There's also inventory expansion. You just need a lot more supplies um, and goods, right? Um, there could be again, this happens a lot. There could be a slowdown in receivables. Um, I sort of specialize in contract financing. It's a large part of our portfolio actually, and oftentimes the agencies or the prime contractors could take, beyond their normal term of 30 days. It could be 60 days, 90 days, some cases even longer. Um, and again, you still need to operate. So there's another reason. And again, now capital expenditures, you need specialized equipment in order to realize sales and its growth. We talked about slowdown of receivables, so that's cash flow timing differences. And then, of course, there's always unexpected events. Unfortunately, that's a reality. Um, Accidents, weather, uh, and pandemics like COVID-19. Okay. Um, let's talk about what's known as the 5 C's of credit. Any banker, any lender it's not just the credit score or the FICO score that they're looking for, but that is a very significant part of a borrower's credit profile. On top of that, they're also looking for the business's capacity. They want to see to repay the loan. They want to see a history of repayment. They want to see the historical revenues and cash flows of the business. They want to know what you may have in your account at that time. So oftentimes there's a request for bank statements to get a sense of what your cash flow looks like. Um, Capacity and capital goes hand in hand with that. A lot of times, um, small business lenders want to see some sort of equity component. So, for instance, if we're in the case of, for instance, the Small Business Administration and the loans that they underwrite, they're always looking for at least 10% equity into their loan offerings. Collateral we talked about a little bit. This again helps to securitize the loan. Again, we talked about real estate. That's a major one. And perhaps any equipment or vehicles that can offset the event of a default. Of course, there's also the conditions. We're also looking at the state of the economy. What are the trends in your industry? Are there any potential problems that are occurring? This all is involved in making up a borrower's credit profile. So I'll talk a little bit about the kinds of loans, the types of loan programs at TruFund. So as you can see here, and I mentioned this a moment ago, where a great deal of our business is with contractor finance. The first here is True Access Contractor Mobilization Loans. This is really applicable to state and federal contracts where we can lend between $50,000 to $500,000 for small businesses who've gained or won awards from the state or government. And this helps to fund the cost of mobilization, can provide working capital for the business, materials, and supplies that are needed to begin fulfilling on those contracts. In this case, we like to have the borrower having 1 year of operations, and the borrower must have at least $150,000 in revenue in the previous year. You'll see here that there's no prepayment penalty across all of our loan products. Should you be in a position to repay the loan before the end of term, we're able to offer that loan and retire that loan with no prepayment penalty, meaning that even if let's say the interest rate was 8% for the year and you paid it off in 6 months, you would not be held responsible for the remaining interest revenues for the remainder of the year. There's next to that is the NYC EDC Contract Financing Loan Fund. This was a fund that was started back in 2017 under Mayor Bill de Blasio. The business must have a city agency contract, so New York City. So anything like Department of Education, New York City Housing Authority, School Construction Authority, any of those city agencies would be eligible. In these cases, we can actually lend up to 30% of the contract value with a maximum loan amount of $1 million. The city, because the city is actively looking to support MWBEs, that's minority women and business-owned enterprises, they're able to subsidize the rate, so we can offer the loans at 3% per year. Again, there's no prepayment penalty. Additionally, there's no application fee, and there's a modest loan origination fee on a tiered basis. It would run from 1% to 2%. And then we have our True Access Contractor long-term capital loans. As you can see, it runs from $25,000 to $250,000, anywhere from 2 years to 5 years. The interest rate there would be 7 to 9%. In these cases, there would be an application fee, as well as a origination fee. Origination fees are typically paid from the proceeds at closing, and so there's a small out-of-pocket cost, which is the $250 application fee. Does anyone have any questions at this point about contractor finance?
You should be able to unmute. Jay, are the unmute buttons available for everyone?
Yes.
You should be able to.
Yeah. Oh, someone asked, and I'm looking in the chat, someone asked, can I expound on the middle option?
Okay.
Right. So that's good. So I got someone excited about 3%. That's great. Um, so yeah, I mean, if you have a contract with one of the New York City agencies, um, we're able to help you again mobilize that contract. So if you need, oftentimes it takes quite some time to get paid for services rendered. Once you may issue an invoice today. They may tell you, okay, we'll pay it in 30 days, and then it doesn't always work out that way, for one reason or another. Um, so the good thing is it this is very different from factoring. Some of you may have heard of factoring, where we can actually afford to wait for those payments to come in. So when we talk about what happens is we would take an assignment of proceeds from that contract that would serve as our security. And when you invoice the agency or a prime contractor, should you be a subcontractor, um, the fund, when they do pay, those funds would come to TruFund first, and then we would retain a percentage of those funds to be applied to the principal loan. Let's say 300,000, we would apply it to that $300,000 loan, and then remit the balance back to you, so that you can maintain some cash flow. Um, Usually, I don't, please don't hold me to this number, but usually in terms of how much we retain, it really depends on where you are in the project, the cash flow needs of the business, and we try to, work it out in a way that uh, keeps your helps you maintain your cash flow. But then also we want to be in a position where we're seeing the loan repaid, as gradually as that may be. So usually, if things are running smoothly, every 30 days we're seeing a payment. Usually it's somewhere between 40 to 50% that we retain. So to further expound on this, if you um, received a $50,000 invoice payment, we may hold, 20, $25,000, apply that to your loan principal, and then remit the balance to you within 24 to 48 hours once the funds are cleared in our account. Is Does that make sense? Any other further questions about that?
Feel free to unmute. I don't see any questions in the chat or the
Okay.
Q&A.
Okay, so I'll continue to our other options. Um, the other loan program that we provide is the TruFund Small Business Loan. Again, oftentimes these are used for working capital, payroll, equipment, and even leasehold improvements. If you're leasing a space and you need to do some minor renovations in the space, cosmetic primarily, we're able to support that. So these loans run again from $50,000 to $350,000. These are term loans for 60 months or 5 years. Right now, our interest rate is somewhere between 9% and 11.25%. We, in New York, and of course, and as you see, there's a $250 application fee. In New York, we have been providing these loans under the SBA's 7A Community Advantage Program. And so we underwrite the loan, and then we seek the approval of the SBA thereafter to then provide the funding. Then the other loan program that we are very keen on is TruFund's real estate acquisition program, affectionately known as the RAP. So here it's for that small business who's been leasing a space for a time, and an opportunity comes up for them to purchase the building. And so this is for owner occupied real estate. This is not for multifamily buildings and you rent them out to hold, or condo development. This is really aimed at the small business owner who is seeking an opportunity to really control their destiny and maintain their presence in a community, and really start to build a generational wealth. We all know that real estate ownership is one of the sound ways of building wealth in this country. So we really try to help businesses make that possible by focusing on reducing the down payment amount. If you go to a bank, they're usually looking for 25% down payment or even more. Here, with 10%, we're able to support a business looking for a loan to purchase the building. As you can see here, the business owners usually need to be located in a low to moderate income census tract. We require a minimum of 2 years in business and a minimum FICO score of 650. One might argue that this sounds similar to the SBA 504 loan program, and it is. However, one of the key differences is that we only require 25% of the property to be occupied by the business. The SBA 504 requires 51%. Again, here we can go from $500,000 up to $5 million. And it's a 7-year term based on a 25-year amortization schedule. So in this instance, you would be repaying the loan with principal and interest, which would, that payment would look like a 25-year note, but it really would end at 7 years, and we would require full repayment on the loan at the end of that term. Some small businesses may opt to refinance the loan within that 7-year period. In this environment, there's talk of the interest rates decreasing. And so we would certainly welcome an opportunity to be repaid earlier. And of course, for you to, as a small business, to take advantage of those lower rates. Currently, we're at 9% interest per year fixed for the term of the loan. Are there any questions about either of these two programs, the real estate acquisition program
So
and
there's
the
a question
small business loans?
in the chat. It says commercial real estate property only, correct? Non-residential?
That's correct. All of our activity at TruFund is directed toward commercial business. We're not able, under our certifications with the Treasury, we're not able to provide loans to personal individuals. Any other questions?
None in the chat, none in the Q&A.
Okay. Thank you, Kenya. Thanks for being my eyes and ears.
You're welcome.
So, one other thing I wanted to mention about the real estate financing is that we are also able to support a small business that already owns a commercial property. These properties can be warehouses, offices, even commercial condos, mixed use buildings, where there may be residences, residential tenants above the primary retail space. So all of those building types would be eligible for refinance or acquisition. And these same numbers apply to a refinance as well. The loan amount, the loan to value, the term of the loan, and the interest rate. So let's talk a little bit about the loan request itself. And we've already sort of touched on some of this, but I just want to make sure it's laid out. So as a small business owner, it's really important when you are seeking a loan that you're very deliberate and specific about the amount that you're requesting and the purpose. Um, you know, every lender wants to see that their use of those funds are being directed towards the business's prosperity, right? So it's very important that you have a really good think on what that looks like for you and your business. And as we talked about earlier, certainly your ability to repay the loan. What do you foresee in the future? What have you seen historically in the business, and try to have a good put some real thought into that from the front end. That, for one, that's going to demonstrate to the lender that you're serious and that you're taking this matter seriously. And it's another little insight into the business owner's character. The type of loan facility, a term loan, a line of credit. Again, just thinking about how you're going to be using the funds and how those funds can impact your business in a positive way. Repayment terms. This is usually obviously up to the lender, but it's also a conversation, right? It's understanding how long you might need the loan for, and what that repayment schedule will look like. And these are all things that once you go in and there's a review of your financials, and the need, this is where that information would come forward. But it's also something that you should be thinking about as well. Then there's conditions and covenants. Here again, it's what are the market conditions for your business? and what kinds of, you know, guarantees or um, that you could provide in terms of meeting the repayment terms. Collateral we talked about, and the guarantee. So all of our loans require a personal guarantee. Um, whether you own real estate or not, everyone would be held personally liable for these loans. So they do report to your credit. Um, and again, it's important that that you have a good understanding of what that means for you and your business. Any questions about this? Okay.
Good. No questions in the chat or Q&A.
So let's talk about what the credit analysis looks like. So we would be looking for personal tax returns for 2 to 3 years, personal financial statements, and if there are any owners with 20% or more interest in the business, they would need to be identified as well and provide their personal financial statements and tax returns. Sorry. We'd be looking for an understanding of the business itself, the ownership, the management. You know, you want to see experienced business owners who can conduct the business, right? We're going to seek out what kind of training they've had or specific education they've had in order to carry out the business functions. Look at percentage of ownership. If there's a board of directors, we again, it's really getting an understanding of the business from A to Z. Here again, track record, time in business, successes and failures, the types of customers that you typically see coming through your doors. Like to get an understanding of the suppliers as well. What does the competition look like, right? And again, as we mentioned earlier, industry conditions and trends. One thing I want to say, well, and of course, let me finish with this. And then, of course, there's 3 years of business tax returns or financial statements, interim financial statements, so profit and loss reports for year to date, or if you have not yet completed taxes, we'd want to see your company prepared financial statements. There's also, we like to see the balance sheet of the business just to understand the overall financial health of the company. And here again, the income statements, cash flow statement, any receivables outstanding, those are considered assets of the company. And then of course, anything that's outstanding that you need to pay, you may have vendors to pay. We also would be looking to get an understanding of that as well. In the case of contract finance, we would want to understand where you are in the contract, and also any other contracts that you might be working on, we need to understand the work in progress as well. So I just want to pause here for a moment and say this. So when applying for a loan, it certainly can be a very daunting exercise. But I like to explain to small business owners that it's important in terms of when you're establishing a relationship, to be as transparent as possible. Um, we're not the government. We're not the police. We just want to provide funding and know that it's going to be um, a secure uh, transaction for both parties. So it's important to just be as upfront as possible. The reality is that there's a fair amount of due diligence that goes into any lending transaction, and you know we're going to find out. If there was a bankruptcy, if there was any criminal activity, eventually we're gonna find out, and it's better to just come forward with that on the front end, so that if there are any challenges, we as a lender can find a way to work through them. Or quite frankly, save everyone's time. If I know for us, if there was a bankruptcy within the last 3 years, that would be a hard stop for us. So it's just better to know these things up front. Okay. Any thoughts or questions on that?
Okay, nothing in the Q&A and nothing in chat.
Okay. Um, this may be a little difficult to see, but these are samples of profit and loss statements, and also a balance sheet. I don't know that we need to try and go through it now because it's even a little difficult for me to see. But again, I'll provide this presentation to you, Kenya, and I guess you can disseminate it from there.
Please, thank you.
Again, during the credit analysis, these are the metrics, if you will, and this is what we'll be looking for, the profitability of the business. So when we talk about profitability, we're looking at the net taxable income for the business. TruFund also will look at the net taxable income for personal tax returns. And so we conduct really a global analysis of the income and the debt on the business owner and its business. We look for liquidity in the business. What kind of cash do you have on hand? What's available, right? Leverage, that's really debt. Where are you at? What kind of debt are you carrying? And how is that impacting the cash flow? And then solvency is always about, what do you have in reserve, in the event of a negative event. Okay, so I think the rest of this is pretty. We also look for projections on the business. So what are you seeing in the future for your cash flow? What kind of sales activities are you experiencing currently in order to realize those sales in the future? Um, Again, it really is a 360-degree look at the business and how you can support a new loan. So I talked earlier about really building a relationship and with a banker or a lender, and these are some of the ways you can help to do that. Um, Help the banker get the information they need in a timely fashion. One of the challenges that we have at TruFund is even putting a loan package together with all of the documentation that we require. It's important that maybe you have a really good bookkeeper or accountant that can provide that information quickly. Um, Ideally, we like to see audited financials. We understand that most small businesses are not doing audited financials, but that always helps to give us a stronger understanding of where you are financially. Um, you know, Talking with your banker and updating them periodically is always also helpful. Um, we like that level of engagement. Um, right? So, providing some of the information, even on a quarterly basis, balance sheets, income statements, contract status reports, receivable aging, payables aging. This this helps to keep things on track and also keeps you front of mind for that banker or lender, right? The next time you come for a request, I know I see it with myself, um, I have special borrowers, right, who are very forthright. They provide what you need pretty much right away, and you're able to really um, move through the lending process in a more smooth and efficient way, right? And that's how that relationship is developed. Um, yeah, and then also just being on top, being knowing your business, I think is really critical. Really knowing your business. So if we should ask about your suppliers, your vendors, your customers, other lenders, um, you know, you should be able to discuss that freely without too much difficulty. So, one of the things we find is, you know, many of the small business owners that we see, they know their craft very, very well. But then the other aspects of the business, which are, the more administrative or and really understanding their financials, that can be challenging for a lot of our borrowers. And so we try to really encourage small businesses to really know the business and know their numbers, right? Um, and yeah, and just be aware of your personal credit report. If you do use a Dun and Bradstreet for the business, just making sure that information is accurate. Oftentimes we'll run a credit report and the score will be low due to disputes that haven't been resolved, right? And then now, you've got to try and work with the borrower to address those or wait or put the loan on hold possibly even withdrawing the loan to a later date when those issues are resolved. Um, at TruFund, we actually have a partner who can assist with credit repair um, at no cost to the borrower. They just would simply need to identify that they are working with TruFund, and there would be no cost for that service. And then, 3 months time, 4 months time, um, when the credit has improved, we could then revisit the loan opportunity. Are there any questions about this? Okay.
You can continue.
Hello?
No questions. You can
Okay.
proceed.
All right. Thank you, Kenya. Um, so when we start looking at what uh, an underwriter at a bank would be looking to arrive at in approving a loan, this is what a calculation would look like. So in this instance, to determine the cash flow and amortization based on a 5-year term loan, at TruFund, we're able to not only look at the net taxable income or profit of the company, but we will also add back into the income stack depreciation. You may have depreciation on equipment, real estate. Those are all things that we will add back into the income stack. Also, if you have other loans and you're paying interest on those loans, let's say it's $10,000 a year, we would add that back into the income stack as well. And this is all being done to arrive at an acceptable debt service coverage ratio. For TruFund, that debt service coverage ratio is typically 1.25. So for every dollar that we lend out, we need to see that there's $1.25 coverage for that loan. As you see here, it's net income plus depreciation plus interest expense divided by the annual debt payment. And that's how we arrive at the debt service coverage ratio. Here's an example of this. So in this example, Joe's Construction, he has annual sales of $1 million. The depreciation expense listed on his tax return is $9,000. He looks like he's paying interest in the amount of $7,000 per year on other loans. And his net taxable income is $15,000. He also has outstanding receivables that he's waiting to collect in the amount of $110,000. So that's all comes from the financial data that we've collected, right? The loan, he's looking for a loan of $100,000 with an interest rate of 5%, 5-year term, as we mentioned, and it looks like his monthly payment is $1,887.12 with an annual payment of $22,645.48. When we run all those numbers, we arrive at, for this $100,000, we add the net taxable income, the depreciation, the interest, 15,000, 9,000, 7,000, and then we divide that by the debt that he's supposed to be paying, which is 22,645, and we arrive at a debt service coverage ratio of 1.37. So here in this instance, yes, Joe can afford this. The this loan $400,000 or this line of credit $400,000. The accounts receivables are considered collateral because this is an asset of the company. Funds that they're expecting to receive. And at this level, it meets 70. We take 75% of that to arrive at $82,500 as collateral. Are there any questions here about this? Now, at TruFund, while we prefer debt service coverage at 1.25, there are instances where we will go down to as low as 1.1. But that is really our sort of our buck stop, if you will. Also, I also want to mention that for credit scores, with the exception of the commercial real estate loans, our minimum credit score requirement is 600. So again, these are ways in which we're able to help a small business gain access to funding where they otherwise may not qualify at a traditional lending institution. So again, this is how, we arrive at the decision, part of the decision process. The purpose, the legal aspects of it, the ethical aspects of it. Is it policy compliant? So with TruFund, just so you know, this is important. As a CDFI, we cannot lend to any business that is involved in primary sales of liquor and alcohol. Currently, we are not lending to cannabis, and certainly no adult entertainment or gambling. These are what we call the sin businesses, if you will, and we're just not allowed to lend there. The repayment analysis. This is what we've talked about through much of the conversation tonight. The cash flow and the debt service coverage. Is there collateral, a property, or an agency contract in these instances? And again, guarantees from the borrower on personally. We always look to arrive at a structure for the loan in terms of repaying it. And of course, it's incumbent upon the borrower to pay in full, pay on time, pay as agreed. Again, a lot of this we've already discussed.
I have a question in the chat.
Yes.
Which credit bureaus does TruFund perform their hard credit inquiries with for the borrowers?
Yes. So we actually look at all three bureaus: Equifax, Experian, and TransUnion. And what we would do, we do know that oftentimes those scores can vary widely. But what we do is we take the middle score and use that as our metric. Are there any other thoughts or questions?
None present.
Okay. So again, I know I overemphasize this in terms of maintaining the relationship, but it is important. Um, have the banker come visit, see the operation. Um, you're proud of your business. It's an opportunity for you to really highlight what you're doing, right? Um, Communication regularly is always healthy, and of course, the bottom line is, you need to make your payments on time. If there's going to be an issue with payment, let them know in advance. Don't. The worst thing is to stick your head in the sand and ignore it. Like it just, you really do. It really is. You're digging a deeper hole. Like a lot of people do that. I'm not saying anyone here, but I can't begin to tell you. It really is not progressive. Um, and even attend some networking events with your lender. I actually have several bars who I've invited to events, and they've joined, and it's an opportunity for them to network and identify new business opportunities. So again, this is not a adversarial relationship. This isn't a us against them. It really should be more understood as mutually beneficial for both you as a business and us as lenders. So let's quickly talk about some of the common issues and challenges. Um, and we've touched on some of them throughout this discussion, but a borrower may not have financials and corporate documents readily available. In these instances, we would probably withdraw the application, um, and explain to the borrower that when they do have these documents available, to come back to us. It's a no today does not mean I'm sorry, a no today can lead to a yes tomorrow. So um, it's not like you come to us and the door is closed forever. Um, Another challenge is weak financials, poor credit. Um, some businesses have a habit of commingling their business income with their personal income, and that can make things a bit messy, right? It's not clear. Um, in the case of contract finance, we may see that based on the award, you're not profitable, or you may not be able to repay the loan. That would also be a non-starter for us. I've had small businesses um, come to us seeking funding uh, well in advance of the start date. Now, I do like the idea of um, discussing a contract that's been awarded and beginning to prepare for it for a loan, but certainly could not expect that loan to be dispersed. Um, and then you're not starting the contract until the end of the year, in this instance, 6, 7 months, right? It that wouldn't make sense for us. Um, the other challenge that we often come across is an agency or a prime contractor is unwilling to sign off on the assignment of proceeds. Again, that would be a non-starter. The assignment of proceeds is actually a very critical document to securing our loan. So again, we touched on this earlier about making sure that you have a real handle on your business and the financials. Um, so building a professional support team is important. Someone who's experienced, a lawyer, your accountants that are experienced in these areas, or certainly in the business that you're conducting. That's another very important piece that unfortunately, small businesses tend to ignore. And I get it. You're trying to reduce costs. I can do this myself. I can call my aunt, my uncle to do it. Um, but um, when you're in business and you're as serious about it as we would think you are, these are some of the elements that are there to support you. And and one might say it's pay to play, but it is important to not be what do they say, penny wise, pound foolish.
There's a question in the chat. What if a small business has been awarded a small business grant in the past? Does that look favorable on the small business credit history, equity, or more?
So if so, let me understand. If a business had a loan in the past,
A grant, a small business grant?
or a small business grant,
Mhm. How does
um, I think to be honest with you, any financial activity where there's been an injection of capital is a positive um, presentation to a lender. Um, I think what'll be key to that is understanding how the funds were used and how it impacted your business for growth and or sustainability.
and this grant is currently active?
The grant is currently active.
Mhm.
Yeah, so it's a grant, right? So that doesn't have to be repaid. That would not in all be considered debt. Um, and then if you're looking for a loan, that would only be, additional funds, additional capital to support the business. So it would be looked on, as income for the business. I mean, even, that grant could even be considered equity in the business, even, capital and cash that you have on hand to support the business and, even any loans that may come thereafter.
And another question, and does TruFund have any other microloan or grant programs for micro small
So,
business or some?
so unfortunately, at this time, TruFund does not provide grants or have any grant type opportunities. Whenever those are made available by the city or the state or even federal, um, we certainly make our borrowers and our, sort of circle of influence, we make that available to folks as well. But right now, there aren't. There were several grants given during the pandemic, you know, for disaster relief, things of that nature. But currently, or to get a business back on track. But currently, we don't have that. And TruFund is really a lender. We're not really a grant provider. Um, but like I said, when we do um, see a grant opportunity from a philanthropic foundation or the city, state, or government, we certainly do everything we can to make that information available.
Right. Are there
Um,
other questions?
yeah. Any other questions? Really? I can be an open book here. It's okay. Oh, so some of you may be asking as well, do we provide startup funding? And really, we don't. Um, the only thing where we could assist with that is through the SBA 7A program. As I mentioned, they have very stringent requirements. Oftentimes, they want to see a collateral piece. They're going to want to see really experienced management for the business that you're taking on. And they're also going to want to see some sort of capital injection. So if you need, $100,000, they're going to want to see you come in with $10,000, typically, or demonstrate in some way that um, there's equity in the business. We do not really provide loans below $50,000. I think that's more of the micro lending space. We have partners that we could certainly refer you to that do, go up to 25, 30, $50,000. It's just what I like about the CDFI space is, you know, everyone is a little different. And, when we're able to, if so there's something that we can't do, we're more than happy to refer that business owner to an entity that can get them the service they need. So it's a really tight community that way.
Okay, looks like we are at the end of the presentation. Since I do not see any other questions in the chat or in the Q&A, you're more than welcome to unmute again to ask your final questions before we wrap it up for this evening. I'll give you a few more moments to think of your questions.
And of
Uh,
course, I leave you here with my contact information, the the scan code is there as well. If you can access it. But yeah, this is how you can reach me, and I'm very accessible. Yes. So I look forward to hearing from any of you.
so we have a participant who may reach out because they are interested in the below $50,000 lending programs.
Okay. So I'll yeah, we can talk offline. Feel free to email me at jstewart@trufund.org, or you can call or text me at the 917-658-7117, and I'll certainly accommodate you as best as I can.
Great. I want to thank everyone for joining us this evening, and I would like to especially thank Jepta for coming and giving us this very valuable information because this is a question a lot of business owners want to know. How can I get funds? I need startup. I don't really have any money. Where can I get it? And Jepta just laid it out with TruFund, what their eligibilities are and the different programs or products they have available for lending. Okay, and if you would like a copy of this presentation, I did put the email address in the chat. So please feel free to send us an email so that we can get this presentation out to you.
Yes, I was planning to email it to you, Kenya, and
Yes, please. And
yeah,
once they request it, I will make sure they get it.
fantastic.
Mhm. Thank you guys. Happy Easter, everyone, and have a great evening.
Yes, happy Easter. Yes.
Yes. Thank you.
Thank you. Thank you for joining.
Yes.